Hey, what's up, guys? Today is March 22nd, 2019, Friday. So happy Friday. I felt like it's been quite a few days since the last time I made a video, and so I wanted to make this quick video to do a quick recap on the week. Some major news happened this week, and just analyzing some charts across the broader market. So, anyways, the first major events that happened this week was actually the FOMC meeting, conference meeting. Basically, they gave us insights. The central banks gave us insights as to where they feel interest rates are headed or how they plan to maneuver monetary policy. And so this is a very critical thing because if you guys follow financial markets pretty heavily back in like November, December of 2018, the markets dipped pretty heavily, anywhere from like S&P 500 down 20%, and even the Russell 2000 more than 20 some percent. So really insane declines that I personally haven't seen in like the probably last 5 years of trading or watching the financial markets. And so, it's definitely interesting times right now if you're watching financial markets. So that was the first big thing that happened this week. It really fluctuated markets. We saw markets rally that day on Wednesday when they announced the news, and then gold rallied as well. And if you know me, I'm quite bullish on gold, but maybe I'll make a video on that like after this one. This one's going to be about just the broader market analysis. So that was the first one. The second major news or event of this week, at least in my opinion, is definitely today's trading action. So if you could look at my FinViz board right here, you see that on the left you got Dow Jones, Nasdaq, and then over here S&P 500. All the broader major indices, USA indices, are down significantly, close to some of them close to 2%, and the Nasdaq down 2.5%. So it seems that volatility is back, and I would anticipate further market downside, especially with like a strong 1 day candle close red on the indices. So we're going to take a look at that. Let's do that. Now keep in mind it is red around the world as well. Right here is the heat map for the USA, but if you look down here, you got like Canada, South America, America, United Kingdom, and then like Asia. So we won't look around the world. We're going to look at USA market indices and or USA broader markets, and just kind of analyze how the action turned out today. So starting with the S&P 500, this is what I'm seeing. So if we look back maybe about 4 days ago or last week when I was analyzing the S&P 500 at the last investment club. So I teach an investment club every Sunday. You guys are welcome to join. Information is found down at the bottom. So every Sunday I teach 10 a.m. to 12 p.m. Pacific Standard Time. Feel free to join. There's a free webinar. Anyways, we were, let me see if I can find my mouse. Well, we were looking at this area prior to the trading week, anticipating that, okay, it's definitely grinded all the way above this line right here, and it looked like markets really wanted to break out, and that's what I was actually thinking. I slowly transitioned my thoughts to being more bullish. I remember over here, this is where I was a little bit more bearish, but now hanging up here, I got a little bullish, but as the markets started to turn again after FOMC, especially today's trading day, now I'm thinking that I'm transitioning back into the bearish view. And this is where it closed towards the end of the day. So I do anticipate S&P 500 to decline further, a retest of the 200-day moving average. If this doesn't work out, then I think lower we go, because I think, personally for me, the 2018 December pullback right here, I don't think it's over. I think this was like a market chasing, like a greed chase up to the upside. I feel that it's going to come back again, and we might even get a retest back at the 240. So a lot of scary moves up and coming, maybe, if certain price areas don't hold. Moving over to the QQQ or NASDAQ, this one's starting to look pretty bad as well, but not as bad as the S&P 500. Again, the S&P 500 is below this major line that we drew right here. So that's starting to look bearish. This one is above this major line right here. I'll draw it real quick. Just 1 second. So it is above this line right here. So nothing too bad yet. Well, I guess you could say it's below that line now that I drew it. So that's looking a little bad. But then there's major support right here as well. So this is one of the indices that performed very bad in terms of like a 1 day performance, but it's looking a lot better than the other indices. Now, moving over to the next indices or index, we have the Dow Jones. This one's looking almost as bad as the S&P 500. So far the S&P 500 looks pretty bad. Dow Jones looks pretty bad as well. Nasdaq looks okay, but it is the worst performer as today. So that's just something you want to pay attention to. If I were to annotate the Dow Jones ETF, so I see the same support that FinViz objectively sees, right there. And I do see that 260s acting as resistance, and this is where we close out for the day. So potential retest of the 200-day moving average right here. Though I do feel that markets are looking pretty heavy, we might get a move further down here. So anticipate that is what I want to say. Moving over to the last indices, IWM, and what do I see here? Pull out my drawing tool. This one is probably the worst out of the last three indices that we were looking at. This, if you were just to look at this candle right here, I'll change it to this color blue. Right there. One whole day of very high volume activity to the downside. When was the last time we had something like that? Maybe right here. Yeah, that was looking pretty bad. But definitely, almost on par with this. This one's a lot bigger. Uh, but last time we had a candle like that, I'd probably say right here. So my anticipation moving forward, at least in the next few trading days, is definitely hedge your positions, or at least if you have gains, take some. That's my opinion, educational opinion only. Uh, and maybe consider going long volatility if you know how to trade volatility. But continue with the technicals right here. This is the resistance right here. The 200-day moving average acted as resistance the whole entire time, and this is where we are today. So guys, that's me analyzing across the board in terms of like USA broader market indices. It's looking pretty negative. I say start protecting yourselves right now. Some choices would be long gold, buying puts on the indices, or hedging your current stock positions, or even going short the market. But anyways, that's my quick take, and I hope you guys enjoy. Thanks so much.